Yes, let's begin. Let's begin residential status and house property. Basic concepts is completed. Inside the total income computation, we understood what are all the checkpoints, and now let's begin residential status. As I already told, I am back at 9:15, 9:20 I told, so I'm back. So I hope everyone are going to be back. In this session, I am going to at a stretch cover residential status as well as house property. Both I am going to cover. Believe me, just residential status alone 4 to 5 marks weightage will be there. House property also 4 to 5 marks weightage. 10 marks we are going to cover within the next 45 minutes to 1 hour. That's it. I hope everyone had dinner. Actually, I missed dinner. So it is getting ready. So after this, I will have, after residential status and house property, I'll go and have. Fine. So residential status. We all know residential status is different from citizenship. What is a residential status? What is the purpose of residential status? Only if a person is resident in India. Only if a person, I'm talking about person means anybody, maybe company, maybe individual, maybe LLP, whatever it is. Only if a person is resident in India, that is taxable under, only if a person is resident in India, his income is taxable. Most importantly, residential status is important because the taxability of income is different based upon residential status. Whether a particular income is taxable or not, it mainly depends upon residential status. When a particular income is taxable, we all know, like I have given you here, for resident and ordinarily resident, like individuals and HUFs, we classify them into 3 categories: ROR, RNOR, NR. Individuals and HUFs are broadly classified into 3 categories: ROR, RNOR, NR. Remaining all other SSEs were classified into 2 categories: either resident or non-resident. Now remaining entities are either resident or non-resident, whereas for individuals and HUFs only, this middle column is applicable. By the way, if at all any of you want this PDF, it is there in our Telegram group. Below in the description, Telegram group link is given. So rest of us CA group is there. You can join that group and you can download this particular book. It is there in the group also. This middle column is applicable only for individual and HUF. Remaining all other SSs, companies, they are either resident or non-resident. Now, when we are talking about individual, resident means basic resident. Then we need to check whether he is ordinarily resident or not by some conditions, which we will discuss later. So first let us look at why residential status is important in income tax. Because for resident and ordinarily resident, for a resident and ordinarily resident, global income is taxable. For resident and not ordinary resident and non-resident, only 2 types of incomes are taxable. What are they? Either source must be in India or receipt must be in India. For RNOR, if source and receipt both are outside, but it is from business controlled from India, profession set up from India, then also it is taxable. For RNOR, even though the source is outside, receipt is outside, but if it is from a business control from India or profession set up in India, that is also taxable. Getting it? Indirectly, this entire table is given in 3 simple points. For ROR, global income. RNOR and NR, income accrue in India or deemed to accrue in India, or income received in India or deemed to be received in India. These 2 only taxable. For RNOR, even though the source is outside, receipt is outside, if it is from a business controlled from India, if it is from a profession set up from India, that is also taxable. Now, first and foremost thing, where it is received, you see, in India, everybody it is taxable. Not received in India, then see where is the source. Is the source is in India? Source means what? Accrue in India, deemed to accrue in India. Then everybody it is taxable. Sir, both are outside, sir. Like income is, for example, this is the case, sir, both are outside India, sir, not taxable. RNOR not taxable, NR not taxable. For ROR, global income is taxable, correct? Sir, income is outside, sir, business is outside, but it is controlled from India or profession is from India. For every resident it is taxable, for non-resident it is not taxable. That's it. This is the main rule. Okay, now why we need to understand residential status? This section 5 is the reason. That's it. Now let's directly understand how to decide residential status for, we have residential status for individuals, we have to understand residential status for HUF, we have to understand residential status for others. For others means what? Firms, AOP, BOI, local authority, artificial judicial persons. So look at this. residential status we should determine for broadly 3 categories. What are they? Either for individuals, HUF, company, fourth category also, sorry, others. Actually it's not 3, 4 categories. I will divide residential status topic determination into 4 categories: individuals, HUFs, companies, others. Now others means what? Other than these 3. For others, what is the residential status? For others, what is the residential status? Sir, control and management. Is it in India wholly or partly also? Even if 10% control and management in India, that's enough. Remaining people are said to be resident. Sir, 100% is outside India, sir. Control and management is 100% outside. Then they are called as non-resident. I am talking about others. Others means what? Not an individual, not a HUF, not a company. They are called as what? Others. So if source of income is either 100% in India, partly in India, we will call them as resident. If 100% source is outside India, we will call them as what? Non-resident. Simple. What about a company? What is company's residential status? Very simple. Suppose if the company is an Indian company, it is a resident. If the company is an Indian company, it is a resident. Suppose what if the company is other company, not an Indian company, then we will check POEM principle. If place of effective management is in India, it's a resident. If place of effective management is outside India, then it is simply non-resident. As simple as such. That is what we have given in the book also. You see, residential status of local authorities AJP, if it is wholly in India, partly in India, it's a resident. The same logic is applicable for LLPs, forms, AOP, BOI, everybody except company, except HF, except individual. Suppose if it is a non-resident, when it is a non-resident, very simple. Control and management is wholly 100% outside India, then they will become non-resident. Now coming to company. Coming to residential status of company. Is it Indian company? Yes sir, resident. Is it not an Indian company? Then check where is the effective management. Where is the place of effective management? Identify. Sir, it is in India, sir. Then it's a resident. Suppose if it is not in India, sir, then it is not a resident. If place of effective management is in India, then the company is a resident. If place of effective management is not in India, then company is a non-resident. As simple as such. Now let's come back to how to decide residential status of HUF, how to decide residential status of individual. 90% of the students have a doubt on deciding residential status of individual. Individuals related residential status only, many are having doubts. This I am going to give you a crystal clear rule. Believe me, you will get clarity on residential status like never before. Just within this next 15 minutes, you are done with residential status chapter. Look at this. What is the residential status of individual? Yeah, we all know individual and HUF know. Either they can be resident and ordinarily resident, resident, not ordinarily resident, and non-resident. And there is another concept called deemed resident under 6 clause 1A. Do not look at this diagram. Look at the matter what I'm going to tell. First, no, for individuals, no. See, individuals are 2 types, either resident or non-resident. Again, this resident, no, individuals are again subclassified into 2 types, resident and ordinarily resident, resident but not ordinarily resident, either RO or RNOR. 2 different categories were there, and third one non-resident. 3 categories. Now, first let us understand whether an individual is a resident or not. First we will understand. First let us understand when an individual will be a resident. When an individual will be a resident. First let us understand this. Then we will think about, is he ordinarily resident? Is he not ordinarily resident? Then we will think about when he will be a resident. In the current year he must be in India. Simple logic. In the current year he must be in India. You are doing problem for financial year 23-24. In examination for you, Jan 25 attempt, problems will be asked on previous year 23 and 24. In the 23-24, if at all he is in India in that year for some number of days, I will tell you the number of days, then he is a resident. Whether he is an ordinarily resident or not depends on the past years. It depends on the past years. Past also he is in India. Current is in India, ordinarily in the past also is in India, then is an ROR. Current only he is in India, ordinarily past he is not in India, then he is an RNOR. As simple as such. That's how the logics of ordinarily, not ordinarily coming into the picture. Next. Now look at this. ROR, RNOR, you understood, right? No, the logic behind. Now, first of all, ordinary and not ordinary, leave it aside. Is individual resident? Look at this. Individual is resident in 3 circumstances. Individual will become a resident. Resident means what? I am not talking about ROR, RNOR, I am not talking about OR, NR, I am not talking about. I am talking about first letter R. Is an individual resident first. For this, we have 3 categories. We have 3 categories for this. Three types of levels, 3 types of information we need to check. Something, one is basic conditions. One criteria is basic conditions. One category to identify whether individual is a resident or not is basic conditions. There is another condition, another situation called special resident. There is another situation called special residential status. Special residential status with 120 days logic and 15 lakhs income logic. There is another way how to decide individual residential status. That another way is what? 120 days logic, 15 lakhs logic. Sir, what is it? We'll come back to it. There is another logic called deemed resident. There is another category called deemed resident. What is deemed resident? He is staying somewhere abroad. In that country, it's a tax-free country. He is staying in a country where it is a tax-free. Are you getting it? No, don't worry. In this category 2, these individuals know, they are visiting India. Remember, category 2 can be applied only for those who are visiting India. That too, who are they? Indian citizen or Indian origin. Category 2 status is applicable either for individual. Just a minute. Yeah. Category 2 is applicable either for Indian citizen or Indian origin. Only for these 2 people, category 2 status we will check. Category 3 is applicable only for Indian citizen. Category 3 is applicable only for Indian citizen. Just a minute. Yeah, I think everybody, it is cool. I think voice is clear. Yeah, fine. So category 3, deemed resident logic is there, right? Deemed resident. I will write full forms for your understanding. Okay. Deemed resident. Now, an individual either satisfying category 1 or coming under category 2 or coming under category 3, only then he is a resident in India. Once he come under any of these 3 category, then what we should do, we should go and check additional conditions. Now here one crux is there. Suppose if an individual is a resident as per second category, 15 lakhs logic, 120 days logic, or he is a resident as per deemed resident. In these 2 cases, if at all an individual falls under category 2, an individual falls under category 2, or individual falls under category 3, if at all, he is always RNOR. He is always RNOR. Sir, then what is category 1? It talks about something called basic conditions. What are they? You see, basic, first you see, I clearly given in the book also, basic residential status of individual. First let us decide basic residential status of individual. Once we understand basic residential status, then the second step is ordinary status you can decide. How basic residential status can be decided? Category 1, category 2 special residential status, category 3 deemed residential status. So clearly I gave. Now, just a minute. So basic residential status, category 1. What is category 1? An individual is treated as a resident in India in the relevant year. For you, 23-24 is a previous year, is a relevant year. If they satisfy any one of the following criteria, any one of the following conditions, any one is enough. What are they? Sir, he is in India. He stayed in India for 182 days or more. He stayed in India in the current year. In which year? During the relevant previous year. During the relevant year, 182 days or more than 182 days he stayed in India, sir. That's it. As per category 1 is a resident. Sir, In the current year, he did not stay 182 days, sir. In the current year, he did not stay 182 or more than 182. He did not stay, sir. Getting it? Then check the second criteria. In the basic condition, second basic condition, you check. Is he in India? Is individual in India for 60 days or more? Check out. During the year, is he there for 60 days or more? Check out. Yes, sir, he is in India during the year for 60 days or more. Current year, 60 days or more, he stayed. And one more condition. Okay, not only current year, in the past 4 years. Past 4 years means what? You are doing problem for 23-24. 23-24, keep it aside. 22-23, 21-22, 20-21, 19-20. In the past 4 years, put together how many days he is in India? Check out. 365 days or more, sir. In the current year, 60 days or more. Last 4 years, 365 days or more. He is said to be resident. He is again a resident. When I will check 60 days criteria, when 182 days logic is failed, that time I will come and check 60 days criteria. No, again, don't conclude. Still so much discussion is there. Don't worry. I know what doubt you are going to get. If either this condition or this condition, if a particular individual, who is this individual? Sir, he may be a foreigner citizen, sir. He is a YouTuber, sir. In the foreign country, he is a YouTuber. He is coming to India and for a YouTube channel, for his purpose. He may be anybody. Sir, he is a prime minister of foreign country, sir. Sir, he is a cricketer of foreign country, sir. It doesn't matter. Both these criteria you will go and check. However, one exception is there for second criteria. 3 exceptions are there. However, Indian citizens. Look at the word Indian citizen. Look at another word Indian citizen. What is it? Indian citizens who are leaving India. Who are leaving India. Purpose is what? For the purpose of employment. For the purpose of employment. Indian citizens who are leaving India for the purpose of employment or as a member of crew member of Indian ship. As a member of crew member of Indian ship. One, leaving India for employment or leaving as a crew member of Indian ship. Both are employment related only, nothing but. If an Indian citizen leaving India on employment purpose, for him 60 days logic, 365 days, this B2 condition we will not check, we will not apply. What does it mean? For an Indian citizen who is leaving India for employment or as a crew member, when he will be a resident in India in the current year, only if they stay 182 days, only if they stay 182 days in the current year, 182 or more than 182, if they stay only, they will be resident. Sir, if less than 182 days they stayed, if less than 182 days they stayed, what is the consequence? They are always non-resident. They are non-resident. Straight away they are non-resident. For whom? Indian citizen leaving India for employment, leaving as a crew member in the Indian ship. For him only B1, 182 days logic only you will apply. 60 days logic you will not apply. Agreed? Now, there is another category. Now, those who are leaving abroad for employment, suppose your friend is there, he went abroad for studying, he will visit India, no? Later he'll visit India, right? Or your relative is there who settled at abroad, earning very well. He will visit to meet his parents and grandparents, right? We call them as what? Visitors. When it is visitor, no, not only Indian citizen, person of Indian origin is also covered. Sir, who is a person of Indian origin? He is not an Indian citizen, but his parents or grandparents, they were Indian citizens. They were born in India. What is an Indian citizen? Indian citizen means who is born in India. A citizen who is born in India. We call him as what? Indian citizen. An Indian citizen or a person of Indian origin who are being outside India, who are actually outside India, visits India. Who are they? They are visiting India. For them also, we will not apply 60 days logic. We will not apply 60 days logic, which means either citizens who are leaving India or Indian citizen or person of Indian origin visiting India, for them 182 days logic only we will apply to decide residential status. Clear? That is category 1. Suppose I am an Indian citizen. I am visiting India. I stayed less than 60 days. Visiting India, staying less than. By the way, in one of the past exams, there is a question asked. One woman, she married and then went abroad. She left India after marriage. For her, condition B to 60 days applicable or not? Applicable, because she is marrying and leaving. Not for employment. Remember that. Remember this. If at all anybody is leaving, Indian citizen leaving India, for employment only 60 days logic you will not apply. If at all they are leaving for some other purpose, 60 days logic you will apply. Thumb rule. That's it. Suppose category 1 is over. Suppose, sir, I am somebody, I am an individual, B1 182 not satisfied, B2 not applicable for me, sir, for example, or B2 is there not applicable to me. It is not applicable. So am I non-resident? No. You are not directly non-resident. You have to check category 2. You have to check category 2. Whether you may be a resident as per special residential status. What is special residential status? Here you are a resident because you are having high Indian income. In category 2, you may be treated as resident if you have high category, high income. That too, which individual? Indian citizen, Indian origin, visiting India. Indian citizen, Indian origin, visiting India. 60 days logic is not applicable, right? Just now we discussed. But for them, 120 days logic is applicable. For them, 120 days logic is applicable. When you know, if their total income other than foreign sources, which means Indian sources, if their total income from Indian sources exceeds 15 lakhs during the year. In the current year, their total income from Indian sources is more than 15 lakh. Sir, I'm an Indian citizen, sir. I'm an Indian origin, sir. I'm visiting India, sir. So for me, 60 days logic do not apply. I am never stayed less than 182. I always stay less than 182. I always. That's why you see, a person who is visiting India, if at all 182 or more he stayed, is a resident. 182 he didn't stay, sir. 60 days logic will not apply, sir. 120 days logic you see. Is he in India for more than 120? Yes, sir. When you're reading the problem, carefully you see whether he is in India for more than 120. The moment he is in India for more than 120, checkpoint. Is he Indian citizen or is he a person of Indian origin? Check out. Yes, Indian citizen, person of Indian origin, visiting India more than 120 days is there. Is he resident? It depends upon total income. Look at the total income. How much it should be? It should be more than 15 lakh. Which total income? Total income excluding foreign sources. What is foreign source? Income accrued outside India. We have given definition also here. What is a foreign source? Income accrued outside India. Source of income is outside, business is outside, profession is outside, interest, debentures, everything, source is completely outside. And income is not deemed to accrue in India. That is not in India. Source is outside, it is not in India. However, income from business controlled or profession set up in India is there, right? Business controlled from India, that is treated as Indian income. That is treated as Indian. Look, I am not talking about taxability. I am talking about is it Indian income or foreign income. That's it. That too for this second category purpose. Business control from India is treated as source of income in India for the purpose of determining residential status. Remember, not for the purpose of taxability. Getting it? So for the purpose of determining residential status, income, business setup from India or profession control from business control from India, profession setup from India is treated as Indian income. Yes, sir. Now, if this is Indian income definition, suppose income from India, no, it is exceeding 15 lakhs. Straight away 120 days or more is there, total income from Indian source is crossing 15 lakh, he is an Indian citizen, Indian origin, visitor, moreover visiting India, he is a resident. Suppose if this is also not satisfied, now here one crux point I want to tell, one problem will be there, 90% of the students will do wrong there. What, suppose I am having income from India. Okay, some Indian income is there, business also controlled from India is there. I have a business which is controlled from India and I stayed more than 120 days here. I stayed more than 120 days here. Remember, I stayed more than 120 days here. I have incomes. When I total those incomes, it is less than 15 lakh. It is less than 15 lakh. Now, naturally, what I will be? 182 failed, 120 more crossed, but 15 lakhs condition I failed. So, automatically, what I will be? Non-resident. Now they will ask you, non-resident, you're correct. Problem is asking determine residential status. But problem, no question, no, they are asking total income also. Now for a non-resident, which incomes are taxable? Only if the accrue is in India, receipt is in India as per section 5. Now for a non-resident, table visa at the beginning, section 5, business control from India, profession setup from India. Is it taxable for non-resident if both are received outside, accrual is outside, receipt is outside? No, it is not taxable. But for determining 15 lakhs criteria, business control profession setup will be considered. And once you consider that, then he became a non-resident after that, then that income will not be taxed. Remember this point, remember this observation. That's it. Second category, that is about second category. Sir, suppose second category also failed, sir. SSC failed second category, sir. Individual failed with second category, sir. Third category, what you need to check? Third category you need to check. What is third category? Deemed resident. What is deemed resident? Only for Indian citizens we should check. Only for whom? Indian citizens. Sir, what about them? Are they visiting India or are they leaving India? No, no, no. In the current year, no. See, first one, individual category 1 failed. Category 1 he didn't satisfy. Category 2 also he didn't satisfy. Category 3 we are coming. What is category 3? How many days he should be in India? That and all irrelevant. He is an Indian citizen, sir. Indian sources of income is more than 15 lakhs. He is an Indian citizen. He is visiting India or not, doesn't matter. No need to check that. He is an Indian citizen. That's it. Settled abroad. One day also he didn't come India. Look at this example. One day also he didn't come India. Still, he is an Indian citizen. Indian income is more than 15 lakh. Indian source of income. And you know what? The country where he is staying, he is exempted from tax. He is not liable to tax in the country where he is staying. He is exempted from tax. Array, he is an Indian citizen having Indian income, and in the country where he is staying, he is exempted. Our income tax department, Nirmala Sitharaman, want to tax him. I will tax you then. You are a resident in India. That's it. Category 1, 182 or more you check. 60 days or more plus 365 or more you check. 60 or more, 365 or more does not apply to Indian citizen leaving India for employment or as a crew member. Indian citizen or person of Indian origin visiting India. For them, 60 or more does not apply. Suppose if an Indian citizen or person of Indian origin visiting India, suppose they are visiting India, then 120 days or more is their checkout. And 365 or more in the past 4 years checkout. And Indian income source more than 15 lakh is checkout. Yes, that means he is a special resident as per category 2. That is also not satisfied. Then come and check deemed resident. This is also not satisfied. Basic condition not satisfied. Special residential status, that is not satisfied. 120 days logic. Deemed resident also not satisfied. He is a non-resident. He is a non-resident. Sir, suppose in any of these three, one is satisfied, sir. That is not a correct interpretation. Suppose he became a resident as per category 2. He became a resident as per category 2, or he became a resident as per deemed resident. He is always RNOR. He is always RNOR. That's it. Suppose, sir, he is a resident because of 182 days logic or 60 days logic. For example, 60 days applicable to him, sir. Because of that, he became a resident. Now, what about him? Now check ordinarily residential status. Now check what? Ordinarily residential status. Ordinarily. What is ordinarily? Look at the past. Sir, in the past 7 years, is he in India for 730 days or more? Yes. In the past 7 years, 730 days or more, he is in India only. Not only that, in the past 10 years, any 2 years is a resident. Any 2 years is a resident. How to calculate that 10 years data will give you? Last year, see whether basic resident, category 1, category 2, category 3, satisfied or not, he is a resident. Another year you check, he is a resident. Another year you check, he is a resident. Minimum 2 out of past 10 years, if at all he is a resident. For any 2 years, here basic residential status is enough checking. Basic residential status checking is enough. In the past 10, any 2, right? Yes. Any 2 years in the past 10, he is a resident. In the past 730 days or more, he is staying. In the current year, because of category 1, he is a resident. 2 out of 10 resident, past 730 days he stayed. In the current year is a resident because of 182 days logic or because of 60 days logic, then that SSC will be an ordinarily resident, ROR. Otherwise, he is an RNOR. Remember, a person who is a resident as per special residential status in category 2 or who is a deemed resident as per 6 clause 1A, not automatically 6 subsection 1A or special resident as per 15 lakhs 120 days logic, he is always RNOR. That's it. Easy. Then coming to HUF residential status. I hope individual you are freezed, you are done. HUF residential status. What is HUF residential status? HUF also we have 3 categories: ROR, RNOR, NR. First let us decide, is he a resident or not? Is HUF resident or not? First let us decide. It is depending upon control and management. Just like firms, LLPs we have seen, just like for HUF first. For HUF, just like firms, just like LLPs, for HUF, see control and management. Is control and management in India? Is control and management in India how much, sir? 100% or no need? Either 100% or even part of it. Yes, it's a resident. Sir, control and management is wholly or partly in India, it is resident. 100% outside India, control and management is not at all in India, part also, means 100% is outside. Then HF is a non-resident. Sir, suppose no, sir, control and management is partly in India, sir. HF is a resident. Now, is HF ROR? For that, you should see Karta. Look at Karta. Ask him, Karta, in the last 7 years, how many days you are in India? 730 days or more. Okay. Okay. In the past 10 years, how many years you are resident? 2 years or more I am a resident. 730 or more in the past 7 years. 2 years or more in the past 10 he is a resident. Karta past period you should see. If Karta satisfied past 7 years logic, past 10 years, 2 years logic, then HUF will become ROR. HUF will become resident and ordinarily resident. Karta failed to satisfy either additional condition 730 days logic or 2 years out of 10. Any one failed. Then HUF will only be RNOR. One clarification. For a particular year 23-24, HUF can be ROR, Karta can be a non-resident. Because Karta himself is first individual. For him, how to decide residential status? If you ask, if in exam, they are asking Karta residential status is what? Individual logic will apply. Category 1, category 2, category 3, then ordinary residential status. As per that, whatever answer comes, that one. If at all they are asking for HUF, then control and management apply. Past 7 years Karta logic, past 10 years, 2 years resident logic apply. If at all everything is satisfied, then HUF will be ROR. So in a particular year, HUF can be ROR, Karta can be non-resident. Or same way, Karta can be a resident in a particular year and HUF can be a non-resident. Any combination can happen. If at all you have any doubt, once again listen to it. That's it. That's it. With this, residential status topic is predominantly completed. Now let's talk about income deemed to accrue or arise in India. What do you mean by income deemed to accrue or arise in India? Oh my god, almost how much time it is taking? It's taking so much time. 32 minutes. I should complete actually within 30 minutes, but it went beyond 30 minutes. Fine, I'll finish it within next another 5 to 10 minutes. What do you mean by income accrue or deemed to accrue or arise in India? Very simple. If actually you are receiving amount outside India, or maybe so business is also outside India, it doesn't matter. But if it is through a business connection in India, or if there is a property in India, if there is a source of income in India, or if it is a capital asset in India, then the income is deemed to accrue in India. What do you mean by income deemed to accrue or arise? What do you mean by income deemed to accrue or deemed to arise in India? What do you mean by that? In India, if there is a business connection, or if there is a property, if there is a source, or if there is a capital asset, then it is deemed to be accrue in India. However, if some operations are outside India, then that related income is not deemed to be accrue in India. You see, business connection in India is taxable. Business connection in India is accrue in India. Exceptions means what? They are not in India, they are outside India. Outside India means what? They are not taxable. So business operations partly outside. Purchase of goods in India, people are purchasing goods and then selling it outside India. They are going outside India and selling it. That is not deemed to be accrue in India. Collecting news and views in India and then selling outside. That is not deemed to accrue in India. In India, film directors are coming and shooting and then exhibiting that movie outside India. That is not deemed to accrue in India. Rough diamonds, some foreign companies, so they are coming in our notified zones, S and Z, special notified zones. In exam they'll give you SEZ, S and Z, MCQ they'll give. It is specified notified zone, not special economic zone. By mistake student will put special economic zone. If MCQ comes on this, specified notified zones for diamonds. If they are coming and displaying diamonds and they are selling again outside India, that is not deemed to accrue in India. In this, no, this is another important one. Salary paid by government of India. Salary paid by government of India. To whom? Indian citizen only. Where is he working? Outside India he is working. Salary paid by government of India to an Indian citizen providing services outside India. The salary, even though paid by Indian government, it is the salary whatever paid is deemed to accrue in India and it is fully taxable for him. However, allowances and perquisites paid outside India are exempted. Government of India will pay to these embassy people and all allowances, Indian citizens. For them it is exempted. Then coming to interest, royalty, fees for technical services. What is it? Fees for technical. I have given one small table for it. Easy table. Remember why we are paying interest? Interest is paid on borrowed loan. Royalty is paid on patents and software. Fees is paid for technical service. Now, We are paying some interest, we are paying some royalty, we are paying some fees. Other person is receiving na. For other person it is income na. Is it in accrue in India or not is the question. If it is accrue in India, irrespective of his residential status, it is fully taxable, correct? So is it accrue in India or not is the question. Suppose if the interest royalty fees, it is paid by government, it is accrued in India, taxable. If government is paying the interest, government is paying the royalty, government is paying the fee, it is treated as accrue in India, it is straight away taxable. Sir, suppose it is paid by resident, not government, somebody else is paying, but who is a resident in India, he is a resident of India, he is paying. If a resident is paying interest, if a resident is paying royalty, if a resident is paying fees, array resident of India is paying means source is in India, taxable, taxable, taxable. However, the person who is paying this interest, no, the person who is paying the royalty, no, the person who is paying this technical service fees, no, the loan, the patent, the fee, the service is used outside India for business. Is used where? Outside. Oh, I am getting interest from some resident. That resident is using loan where? Outside India. That resident is using patent where? Outside India. Which means because he is using the loan outside, he is getting some money. From that money, he is paying me interest. Source is where? Outside. Not taxable, not taxable, not taxable. Sir, for some other purpose, he is doing outside India, sir. Ultimately, both are outside, no? Though Indian resident only paying. Some Indian resident is paying me interest. Just because Indian resident is paying me, you cannot say taxable. He is using it outside India. He is using outside India for business. He is using outside India for some other purpose. Then not taxable. Suppose non-resident is paying this interest. Non-resident is paying this royalty. Non-resident is paying this fees for technical service. Obviously not taxable. Array. He is not a resident in India. He is paying me interest. I am a foreigner. He is a foreigner. He is paying me interest. How come it is taxable? How come it is accrued in India? Suppose if it is used for business conducted in India, loan I gave to some non-resident, I gave a loan to some foreigner, but what is he doing? That loan is using in India, then taxable. That loan, that royalty patent is using in India, then taxable royalty. That service is used in India, then fees whatever I am getting is taxable. Sir, foreigner is paying, non-resident is paying, it's okay, but service is used in India, the loan is used in India. Sir, for business or profession. For business or profession, he is using it for business. Suppose if it is used for other purpose, whatever it is, in India only, na, non-resident foreigner is paying me, he is paying me interest, he is paying me fees, he is paying me royalty, foreigner is paying for what? For something that he is using in India, obviously taxable. For interest alone, suppose I gave a loan to non-resident, he is paying me interest. That loan he invested in India for some purpose, not business or profession, that is not taxable. Actually, in the law it is, in the act it is not said it is not taxable. In the law it is not said. Actually, the Income Tax Act is silent on this case. But we always take beneficial interpretation, right? So it is not taxable. By the way, here T indicates taxable, nothing but deemed to accrue in India. NT indicates not taxable, which means not deemed to accrue in India. That's it. Residential status is completed. Residential status is completed. 38 minutes. Crystal clear. I have covered how to solve residential status problem. It's indirectly I have told you. Indirectly I told you. I hope every one of you are clear. I hope every one of you have got fantastic clarity. Just reply me, whoever is watching from the beginning especially. That's it. Thank you. Okay. Now let's begin house property head of income. Now let's begin house property head of income. I hope you got clarity like never before. That's it. House property head of income. Just 1 minute, okay? Just 1 minute. Let me have some water. Actually, it was not planned. It was a sudden. Otherwise, I would have intimated you at earlier itself that I'm coming for live. Suddenly, I have decided and doing a live. With house property, today we'll stop. Tonight, I think this will take another half an hour to 40 minutes. 10:40, it will be over. Tomorrow, 8:30, we'll start PGBP. Sharp 8:30, we will start PGBP tomorrow morning. Okay, please get ready. Today, 14th, 13th January, 14th morning, 8:30 sharp, I will come for PGBP live. Every one of you, please come without a failure. Today you also take rest, revise whatever is possible. Then we'll come back and do PGBP revision. Then once PGBP is over, up to 9:30, 1 hour, 1.5 hour it will take. Then some half an hour, 1 hour gap will take. Then we will do salaries revision. With that, live class will be over. After that, I will take deductions and setup and carry forward, which is half an hour topic. After the TDS TCS, I already shared in our Telegram group that you watch. Major portion is over. Deductions also I'll share it to you. Major syllabus will be over. That's it. Now, just 1 minute. Yes, we will. Though I'm having AC all that, no, because of this light, because of this energy, it's getting lightly. Fine. Yes, we will proceed. Let's begin income from house property. You know, for house property, what is the most important thing? You know, format. Never deviate from the format. First, you should compute gross annual value. Getting it? Minus municipal taxes paid by owner only will be allowed as deduction on cash basis. Municipal taxes paid may belong to current year or last year, that last year, future year, doesn't matter. Municipal taxes paid will be given as deduction. Then what you will get is called as net annual value. Net annual value. Look at carefully. So beautiful. I'm going to give you the logic. Minus 30% of NAV. 30% of NAV minus interest on loan. 30% of NAV minus interest on loan. Then balance income is called as income from house property. Then the balance income is called as income from house property. Now, this is the format. Let's discuss one by one. First, what is GAV? What is municipal taxes? What is NAV? What is 30%? What is interest on loan? How to calculate income? Under optional tax regime, under default tax regime, both we will cover. Okay. Now, gross annual value, how to calculate? I will directly show you the book. Okay. Gross annual value. You know, under house property, you know, if you see the charging section, annual value of any property consisting of building or land and building for which SSE is the owner is chargeable to tax. Ownership is first condition. It should be either building or land and building. Only land you are getting some income. That is not taxable. That is taxable under other sources. Either you must be owner for the building or you must be owner for both land and building. Then what is taxable? Your rent amount is not we are taxing. Annual value is taxable. Straight away, what is taxable? Annual value is taxable. What do you mean by annual value? Annual value means what? Sir, I am not renting it to anybody, sir. It doesn't matter. If you're not renting property, it doesn't matter. Expected rent is annual value. What is it? Expected rent is annual value. How to compute annual value? 3 steps. First, compute how much rent from this building we can expect. From this building, from this flat, from this house, how much rent can be expected? Calculate. Compare it with how much you are getting it. Compare it with actual rent received. Then whichever is higher, step 1 or step 2, whichever is higher, that is gross annual value. Sir, what is expected rent? Expected rent is fair rent. Fair rent means what? In the same locality, you can see here, fair rent will be given. You see fair rent here, at mark is given. At means what? The rent that is similar property in same locality would fetch in the same area, same 2 BHK flat or 3 BHK flat or 4 BHK flat or villa, whatever. How much rent we will get? That is called fair rent. So expected rent means what? Fair rent, or as per municipal records, how much rent amount is there? Whichever is higher, but it cannot exceed standard rent, which is prescribed under Rent Control Act. It cannot exceed standard rent. So expected rent can be maximum standard rent. Suppose if standard rent is so big, no need to worry. Higher of FR or municipal value. Suppose fair rent is 3 lakhs, municipal value is 2 lakhs per annum. Standard rent is 2.5 lakh. 3 or 2, whichever is higher, 3. But it is illegal if you receive more than 2.5. So expected rent is 2.5. Sir, suppose no standard rent is 4.5 is there, sir. But fair rent is 3, sir. Municipal value 2, whichever is higher, 3. But it cannot exceed 4.5. Array, it is less than 4.5. No. So no problem. 3 lakhs only. 3 lakhs only expected rent. That's it. Expected rent understood. Most important observation. Expected rent shall be computed always for how many months? 12 months. Very important. 12 months you should compute. However, sir, I purchased the flat in the current year only, sir. October 1st I purchased it, sir. First 6 months I am not the owner. Sir, I constructed only on 1st October, it is over, sir. Sir, I sold the property on 30 September, sir. I am owner for the property in the current year for 6 months only. Then expected rent compute for 6 months only. Then expected rent compute for how many months? 6 months only. Do not compute for more than that. 6 months only you compute expected rent. Don't compute for more than that. Because you are owner only for 6 months. Properties are only for 6 months. Sir, I am a owner long back I purchased, sir. Throughout the year I am only owner. Then 12 months you compute. That's it. Getting it? Ownership period during the year. That is most important. Okay, sir. Expected rent easy. Understood, sir. Now compute actual rent received. What is it? Compute actual rent received. What is received? First identify how much receivable. Receivable means what? Number of months rented. How many months you rented the house? Check out. Sir, I rented it for 12 out of 12 months, sir, or 10 months, sir, or 8 months I rented, sir. Some number of months you rented, no? What is rent per month? Check out. Receivable. We call it as what? Receivable. Suppose, no, tenant, no, he didn't pay 2 months rent. He didn't pay 2 months rent. That is called as unrealized rent. He didn't pay 2 months rent, right? For example, actual rent received is 20,000 per month, sir. 10 months only tenant stayed, sir. So how much it is? 2 lakhs. How much it is? 2 lakhs receivable. He didn't pay 2 months rent, sir. 40,000 he didn't pay, sir. What is the received? 1 lakh 60. What is the received? 1 lakh 60,000. 1 lakh 60. Okay. Suppose, no, here expected rent is how much? 3 lakh. Actual rent received is how much? 1 lakh 60. Now step 3. In step 3, I always tell students to go by case. There is case number 1. There is case number 2. First apply case number 1. As per case number 1, is actual rent received lower than expected rent 3 lakh? Yes, sir. Actual rent is lower than expected rent. And is property vacant? Yes, sir. Property is vacant. 10 months only we rented, sir. 10 months only tenant stayed. 2 months property is empty. Sir, remember here in exam they will tell you tenant left the premises after 10 months. Immediately owner occupied. No vacancy. Remember, that is not vacancy. If owner is staying, that is not vacancy. Vacancy means what? Tenant left, property is empty. Tenant left and property is empty. That is what called as vacancy. Getting it? 10 months only rented, sir. 2 months property vacancy. So actual rent as per step 2 is lower than expected rent and property also vacant. So here there is one logic. What is actual rent as per our answer? 1 lakh 60,000. Yes or no? Actual rent received as per our answer is how much? 1 lakh 60. Vacancy. What is it? Add vacancy period rent. What is vacancy period? 2 months is vacant. 20,000 I did not receive. No. Okay. If at all I am receiving, I will check. What is the actual rent received if no vacancy is there? Suppose if at all property is not vacant, how much? 2 lakhs. Which means department logic is what, vacancy is there or not, your actual rent is always less than expected rent. Your actual rent is always less than expected. That is your mistake, Mr. SSC. That is not my problem. Why are you renting at low? That is your problem. I will treat gross annual value as 3 lakh. I will treat gross annual value as what? 3 lakh. Suppose one small adjustment I will tell you. Let us assume gross expected rent is 1.5 lakh only. Expected rent is 1.5 lakh only. This information is as it is same. Expected rent is what? Let us assume 1.8 lakh. 1.8. Expected rent is what? 1.8. Let us assume expected rent is 1.8 lakh. Okay. Fine, sir. Step 1 is understood. Step 2, same information. Step 2 is how much? Actual rent received is 1.6. Is actual rent received lower than expected rent? Yes, sir. 1.8 lakhs are expected. Actual is 1.2. Yes, sir. Lower. And is the property vacant? Yes, sir. Property is vacant for 2 months, sir. Nobody occupied the property for 2 months. Okay, do one thing. Compute actual rent if there is no vacancy after reducing unrealized rent. That's why after reducing unrealized rent, actual rent is there. For that, add vacancy period rent. Then look at actual rent receivable. Sir, it is coming 2 lakhs, sir. It is coming 2 lakhs. SSC is saying, sir, department, expected rent you want to tax, which is genuine. but I am renting it for more than expected rent. For your information, your expected rent is 1.8 lakh only. After all, my rent, actual rent per annum is 2.4 lakh. 2.4 lakh I'll collect. 40,000, okay, bad debt is there, unreleased, that leave it, but still I will have 2 lakhs if at all there is no vacancy. But now, please, because of vacancy only I have 1.6 lakh revenue. It is unfair for you to tax on 1.8 lakh. Because of vacancy I have 1.6, which is less than expected rent. If vacancy is not there, I would have showed you higher income and paid tax. You need not charge. SSC argued like this with the department. If this is the case, then what department will tell if actual rent received, which is in our example 1.6 lakhs without vacancy, is higher than expected rent as per step 1, is actual rent received without vacancy, without vacancy means what? 2 lakhs. Without vacancy means 2 lakhs. Is higher than expected rent? Yes. If so, then gross annual value will be actual rent received as per step number 2, which is 1.6 lakh. Sir, whether vacancy is there or not, sir, even if vacancy is there or vacancy is not there, doesn't matter. Actual rent received is always less than expected, sir. In that case, gross annual value will be actual or expected, whichever is higher. If actual rent received after reducing unrealized rent is lower than expected rent, first point you should check. Is there a vacancy? Check out. Yes. Vacancy period rent added. If after adding it crossed expected rent, that means gross annual value is equal to original actual rent is there, that one. Sir, after adding vacancy period rent also, it is not crossing expected rent. Which means whether you have a vacancy or not, your actual rent is basically low, which means you are charging lesser rent. That is your problem. I will tax on capacity, expected rent. Gross annual value means whichever is higher. That's it. Suppose in answer step number 2, no, actual rent value is already higher than expected rent. Suppose, then you need not worry all this. Straight away whichever is, then you need not worry. Straight away whichever is higher. That's it. This is gross annual value determination. Until now you are clear. Don't worry, self-occupied, let out to all that I will come to it, all that I'll come to. Don't worry, they are all very easy. No need to mug up. Very clear logic is there. Until now it is go. Until now, are you all clear? I hope everyone are clear. Please reply me. Please reply on the live. I'm waiting for you. Another 15-20 minutes I will wind up. Maybe 20 minutes maximum. Even I am exhausted. Yes. That's it. Thank you for the replies. Now, GAV computed. How to compute NAV? GAV as computed above first. Minus municipal taxes paid. Municipal taxes paid, there is a point. You see, there is a point I've highlighted. What is that? Municipal taxes paid is deduction only if it is incurred and actually paid by owner on cash basis. If tenant bears no deduction. Suppose the property is outside India, but because you are a resident and is taxable, municipal taxes paid at abroad also is deductible. See, why municipal taxes are deducted? Very simple. That's an expenditure. That's why it is deducted. Simple. Expenditure will be allowed as deduction. Then you will get net annual value. Okay. We understood net annual value. We understood this. 30% of NAV. First deduction from NAV is 30%. Sir, I have repairs and maintenance expense, sir. Fire insurance premium I have, sir. Building insurance is there, sir. Painting expense, that and all doesn't matter. Per house property, you will be given only one deduction, flat 30% of NAV. You will be given only one deduction, that is flat 30% of NAV. Flat 30% of NAV you will get deduction. 30% of NAV deduction. Easy. On NAV, multiply with 30% amount you will get. That's it. Very simple. There is another deduction. Look at from here on. SOP discussion, unoccupied property, deemed let out property discussion, everything I will bring, and answer is over. You see, house property, you will get a clarity like never before. Interest on loan. What is interest on loan? What is this interest on loan? Under interest on loan, under section 24 clause B, this interest on loan is broadly classified into two types: pre-construction period interest current previous year interest. Actually, many students call this as current year interest rather than let us call it as current previous year interest for much more clarity. Current previous year interest and PCPA. What is PCPA? Interest expenditure during pre-construction period. During pre-construction period, interest expenditure, if at all I incur, that is pre-construction period. That is pre-construction period interest. Sir, what is pre-construction period? Pre-construction period means, for example, suppose 1st October 2023. Look at this. 1st October 2023 onwards, I can stay in my house. I started constructing the house. 1st October 2023 onwards, I can stay. 1st October 2023 onwards, I can stay in the house. Up to 1st October, I cannot stay. 23-24 financial year. This year is what? 23-24 financial year is year of construction. Correct? Suppose you were born in 1995. You are born in 2005. You are born in December 1st, 2005. Whether you are born in December or January, if at all somebody asks you which year you were born, you will say 2005. Exactly. In income tax, it is financial year. Sir, house property from 1st October 2023, we can stay, sir. Completion certificate is there, ready to occupy. That is available for ready to occupy. Okay, somebody can stay, no one, no problem at all. Completion certificate is given on 30 September itself. For example, once 1st October on, you can stay, which means in which year house is ready? 23-24. For that year, from the year for which house is ready, that year any interest expenditure is there, right? That year, by the way, tell me, in this case, house is ready only in 23-24. You will show this house under income from house property only in this year or before year also? Obviously this year, sir. House itself came into existence 23-24, sir. Why I will show in previous years? Exactly. From 23-24 onwards only, you will show to income tax department this house property income. Correct? Now 23-24 onwards, the year in which house came into existence, that entire full year interest is there, right? That interest is called as current year interest. That interest is called as current year interest. Suppose, sir, 23-24 I constructed, sir, but I took loan in 21-22 year only, sir. I took loan in 21-22 itself, sir, because I started construction 2 years back. Oh, you started construction in 21-22. Then 21-22, 22-23 put together, you incurred some interest expenditure, right? Accrual basis. How much is the interest? That interest is called as PCPI. That interest is called as PCPI, pre-construction period interest. Simple logic, no need to mug up. Like the definition is what, PCPI? From date of borrowal till end of previous year preceding year of completion of construction or year of purchase. So much big definition they gave. In our example, when the construction is completed 1st October 2023, which means what is the year? 23-24. Before year means what? 22-23. End means what? 31st March 2023. From borrowal date, 31st March 2023. Borrowal is in 21-22. 22-23. That's what I told you with simple logic. That's it. The interest amount is called as pre-construction period interest. Now tell me, 21-22 you paid some interest. 22-23 also you paid some interest. You incurred expenditure, right? But that time house is not there. Income tax computation didn't happen. So what happened? You incurred expenditure, but you didn't show it as expenditure. You incurred, but you didn't show. You didn't claim to the department. So pre-construction period interest can be claimed as deduction. Pre-construction period interest can be claimed as deduction. In pre-construction period can be claimed as deduction in the first year for which house property computation will happen. For the first year in which house property computation. In this example, 23-24. In this example, 1st October 2023 house is completed now. So just a minute. In this example, 23-24 financial year is the year for which I will start computing house property income, right? From this year, you can claim interest deduction. How much you can claim? PCPI, suppose let us assume 1 lakh. Current year interest, let us assume 2 lakhs. 3 lakhs. No, you can't claim. This 1 lakh is split into 5 installments. This 1 lakh is split into 5 installments. 1 lakh divided by 5. How many? 20,000. 5 installments you will claim. Each installment 1 year. From which year you can claim? From the year in which you completed the construction. From the year in which you completed the construction. From this year you can claim deduction. So 23-24 first installment, 24-25 second installment, 25-26 like this up to 5th installment. So what is the total interest pre-construction period multiplied by 1 by 5 plus current previous year interest accrued how much? Total put together we call it as interest. This is the interest deduction. Easy until now, understood until now. Still it is not over. Now self-occupied discussion, all that will come. Clear? Now look back. Now look at it. So how to calculate interest? Now we understood. Reduce it from gross annual value, net annual value minus 30% minus interest, whatever. Positive na income from house property, negative na loss from house property. As simple as such. However, for interest on loan, there is a limit applicable. For interest on loan, there is a limit applicable in case for interest on loan, limit is applicable in case for interest on loan. From here the logic is very important, be careful. For interest on loan, how much ever is there, you reduce it, no problem for NAV. But if NAV is equal to 0 benefit you claimed, if NAV is equal to 0 benefit you claimed, if NAV is equal to 0 benefit you claimed, then what is the consequence? If NAV is equal to 0 benefit, when I can claim NAV is equal to 0 benefit? At basic concept chapter I told, sir, this is self-occupied or unoccupied property. Not even for 1 day I rented, sir. Throughout 12 months self-occupied or unoccupied. Throughout 12 months self-occupied or unoccupied. In such a case, NAV is equal to 0 directly can be taken. If this benefit is claimed by the SSE for a particular property, interest on loan, maximum deduction is either 2 lakh or 30,000 as the case may be. Either 2 lakhs limit applicable or 30,000 limit applicable as the case may be. What is this? What is as the case may be? 2 lakh limit is applicable when? 2 lakh limit is applicable when the loan is borrowed for purchase or construction, and the construction or purchase is completed within 5 years from the end of the year in which loan was borrowed. If these two conditions are satisfied, means loan is borrowed for purchase or construction and property purchase or construction after borrowing the loan, no, it is completed within 5 years. 99.99% of the problems it will be there only. 2 lakhs limit apply. Loan is borrowed for purchase or construction. Interest is paid on the loan which is borrowed for purchase or construction. Suppose no, loan is borrowed for other purpose, then maximum interest deduction how much? 30,000. Maximum interest deduction is how much? 30,000. I will also tell you how different problems comes. If you understand this concept, application is quite easy. 30,000 otherwise. Sir, this 2 lakhs limit or 30,000 limit is applicable when? If NAV is equal to 0. When I can claim NAV is equal to 0? If it is self-occupied or unoccupied. When it is called as self-occupied or unoccupied, it is not rented at all in the entire 12 months or entire year for which you are the owner. Sir, I am owner for 8 months, sir. House recently bought. 8 months you didn't rent. Sir, I am owner from long ago. 12 months I am the owner. 12 months you didn't rent. Then NAV is equal to 0 can be claimed. If NAV is equal to 0, benefit is claimed. Maximum interest deduction is how much? Maximum interest. Remember, this is not a flat, maximum. How? First compute actual interest. First compute actual interest. Actual interest is what? Current year interest plus PCPI multiplied by 1 by 5. Yes or no? Is equal to amount you compute. This amount you how much? If it is more than 2 lakhs. Can I claim more than 2 lakhs? NAV is equal to 0. You can't claim. Maximum how much you can claim? 2 lakhs provided loan is borrowed for purchase or construction. Otherwise 30,000. That's the logic. Are you clear? Because we are not taxing it. Already we gave you benefit. NAV is equal to 0. You know we directly gave you the benefit that NAV is equal to 0. So we are not taxing it. That's why interest there is a limitation. Now these limits are applicable under optional tax regime. Under optional tax regime, SSE can claim interest deduction for self-occupied property, unoccupied property where NAV is equal to 0. SSE can claim deduction. for self-occupied or unoccupied under optional tax regime. Maximum how much? 2 lakhs or maximum how much? 30,000. Now many students have this confusion. Sir, this 2 lakh 30, whatever the case, sir, is this limit per SSE, na per house, sir? Per SSE. Remember, per SSE. Sir, I have 2 houses, sir. I have 2 houses, sir. Both are self-occupied, sir. For both the houses, NAV is equal to 0 can be claimed, sir. Yes, you can claim. For both the houses, NAV is equal to 0 can be claimed. Okay, doubts, I will come back to it later. Yeah, for both the houses, NAV is equal to 0, I am claiming, sir. For both the houses, a borrowed loan, sir. For one house, a purchase related loan, sir. Another house, repair related loan, sir. Which limit is applicable, sir? If 2 limits are applicable in a given problem, higher limit you take. 2 lakhs limit only you take. 2 lakhs limit is applicable. Sir, for another house, I paid 30,000 only interest, sir. For this house, I paid 4 lakhs interest, sir. Both put together 430 I incurred, sir. You can claim for both put together 2 lakhs only. The deduction under house property in case of self-occupied houses, is it 1 house or 2 house or 3 house or 4 house, doesn't matter. Maximum is 2 lakhs. Further, remember one point. NAV is equal to 0 benefit can be claimed for how many houses? Only 2 houses. Only 2. I may have 10 own houses, but still I can claim only for 2 houses. I may have 10 houses, all the 10. Suppose movie actors were there. They will have a house in Chennai, they will have a house in Bangalore, they'll have a house in Cochin, they'll have a house in Mumbai, they'll have a house in Pune. Everywhere they'll have house. Everything is self-occupied only. Nobody, they will not at all rent. But they can claim SOP, NAV, 0 benefit for any 2 houses only. Any 2 houses only they can claim benefit. Which houses, sir? For any 2 means which house I should select? Do one thing. First, NAV 0 concept, eliminate. In the problem for all the 5 houses or 4 houses, they will give you expected rent, all that, right? Expected rent itself is GAV. They 5 are own, self-occupied, they are not renting. So actual rent information will not be there. Expected rent will be there. That itself is GAV. Calculate GAV. Minus for each house municipal tax is there. Minus NAV minus 30. For each house interest is there. Minus it. Income from house property will be there for 5 houses. No? 2 houses with high income. 2 houses. Top 2 houses with high income. Getting it? Descending order. Top 2 houses with high income. Those 2 NAV is equal to 0 you claim. Answer over. Those 2 NAV is equal to 0 you claim. Answer is over. Are you clear until now? So NAV is equal to 0 benefit can be claimed for how many houses? NAV is equal to 0 benefit can be claimed for any 2 houses. See, I have given that matter also. You see, self-occupied. What is self-occupied? Self-occupied or unoccupied property, annual value is taken as 0. Provided the following 2 conditions are satisfied. Property shall not be rented. No other benefit. You are only staying there. No other benefit is there. Then if these 2 conditions are satisfied, NAV is equal to 0. Such a benefit is available if SSE is an individual or HF. Further, only for individual HF it is available. That too for how many? For any 2 properties. For any 2 properties. Any 2 means SSE option, that is. Municipal taxes paid. Ignore. Unoccupied property means what? Definition. That's not that relevant. Then deemed let out. Sir, I have 5 houses, sir. All the 5 I am only staying, sir. NAV is equal to 0. Can I claim for all the 5? No. That is not permitted. Any 2 only you can claim. What about remaining 3, sir? For all remaining 3, expected rent information will be there, na? Yes, sir, it is there. That itself is GAV. That itself is GAV. Here, one point I want to remind you. Expected rent will be computed always generally for 12 months because you are generally owner for 12 months. Suppose that year only you purchased, that year only it was constructed, that year only you sold the house. You are owner for only 6 months or 10 months or 8 months. Then expected rent shall be computed for that proportionate period only. In problem, no, SSE bought the house during the year. They will give you full annual information, per annum value. Proportionately only you should take when you are calculating expected rent. Remember this word when you are calculating income under house property. I hope you are all clear. So, if NAV, if SSE has more than 2 properties which are self-occupied, then at the option of the SSE, NAV is equal to 0 can be taken for any 2 properties. Remaining, the other properties are deemed to be let out. They are assumed as let out. Now, when they are assumed as let out, expected rent itself is GAV. Municipal taxes can be claimed as deduction. Interest on loan also can be claimed as deduction. How much? No limit. interest on loan, maximum limit of 2 lakhs, maximum limit of 30,000. These two limits apply only when NAV is equal to 0 is there because of SOP UOP. Sir, it's a DLOP, sir. I computed GAV, sir. There is an NAV, sir. That time, interest on loan has no limit at all. Now, coming to optional tax regime and default. Under optional tax regime, whatever interest is there, you can claim deduction. Let out property, deemed let out property, you can claim deduction, whatever it is. Yes, yes, Monica Krishna, I'll come back to you. Yes, I'll reply to you. Okay, so under optional tax regime, whatever interest expenditure is there, right, you can claim as it is deduction. Whatever interest is there, let out and deemed let out. What about SOP, UOP? For any two houses, up to two houses, if you claim NAV is equal to 0, for each of them, interest deduction cannot exceed 2 lakhs or 30 as the case. Maybe for both put together also, it cannot exceed 2 lakhs or 30,000. That's it. What about default tax regime? Let out and deemed let out, no? Whatever interest is there, you can claim. But SOP, UOP, where NAV is equal to 0, zero deduction for interest. Under default tax regime, for a self-occupied, unoccupied property where NAV is equal to 0, benefit is claimed for those houses, interest on loan deduction will not come at all. What about deemed let out, sir? Arey, NAV something is there, na? You are not showing 0. It is not nil. It is not SOP, UOP, NAV. It is a DLOP, na? No limit for interest. One more thing. Under optional tax regime, loss under the head house property can be set off with other heads of income. Under default tax regime, loss under the head house property cannot be set off with other heads of income. Further, under optional tax regime, loss under house property can be set off with other heads, right? Up to 2 lakhs only. Under default tax regime, you can't set up. First of all, you can carry forward. Many student has a confusion. Sir, can I carry forward house property loss under default tax regime? Absolutely, you can carry forward. No problem, my dear. That's it. Now, sir, suppose I have a house, sir. For 4 months it is rented, sir. Remaining 8 months I stayed, sir. Whatever it is, expected rent is always for 12 months. Formula is same. Part of your length, other that and all you don't see. This is mugging up method. This is mugging up method. Whatever GAV, expected rent, compute for always 12 months. Step 2, actual rent. Compute for how many months it is rented minus unrealized rent, actual rent received. See vacancy, is that property vacant or not? See all that. Answer over GAV minus municipal taxes, NAV minus 30% of the value minus interest. That's it. Suppose if the house is, I am having house, it has 2 portions, then 50-50. All values you will split 50-50. That's it. Logic is same. GAV computation logic, everything is same. Don't mug up like this. But still, I gave in the notes just for your additional information. I never use this in my actual class, you know. Without mugging up like this, we can solve all the problems in our class. Realistically, we will do. That's it. Fine. Finally, that's it. House property is over. Major topic is over in house property. We will wind up the session for today. Okay. We will wind up the session for today. Tomorrow morning, I'll do one thing. Sharp 9. Okay. Sharp 9. I'll start PGBP. By 12 or 12:30, we will close salaries chapter. It will be over. Then I will give you some 2 to 3 hours related. In the meantime, no, I will start at 9 o'clock, right? You go and watch TDS TCS revision. Harsha TDS TCS. You type in the YouTube, you will find a file. You will find a revision file. You just watch that. In the meantime, you are having so much of time, no? That's it. Now, suppose no SSEs no sometimes they will recover arrears of rent. Some long ago some tenant defaulted. Now he paid. Unrealized rent now you are receiving. It doesn't matter whatever it is. It is fully taxable minus flat 30% deduction. It is fully taxable minus flat 30% deduction. That's it. Capital gains I have already given in the previous marathon. Kindly watch in that. Because no, I'm having various other schedules because I didn't plan this earlier, but at least for some topics which occupy 35 to 40 marks of weightage, at least I want to cover. So that's it. Just a minute. So, now, Monica Krishna is asking one doubt. Does home loan top up for renovation is different from home loan for construction? Absolutely, both are different. Suppose if you take a home loan top up for additional floor construction, that is permitted. That interest you can claim without any limit if it is a LOP or DLOP. If it is an SOP or UOP, check the limits. Optional tax regime. Default tax regime, no deduction at all. That's it. Renovation is not covered. Renovation is different. Purchase and construction only 2 lakhs limit applicable. Renovation, repairs, for everything else 30,000 limit only applicable. Further, remember, these limits are applicable only when SOP, UOP benefit is there, NAV 0 benefit is there. If it is LOP, DLOP, loan purpose and all does not matter. Straight away, whatever interest is there, you can claim deduction. That's it. I hope every one of you loved the class. Okay. Co-ownership. Co-ownership means what? In co-owner, only one point you should remember. Each owner will get 2 lakhs limit separately for self-occupied property. Each owner will get 2 lakhs rupee limit for every house. Sorry, each owner will get 2 lakhs rupees limit for their own share. Getting it? So one house is there, 2 owners were there. How much is the interest deduction limit? 4 lakhs, because 2 owners are there. 3 owners are there, 6 lakhs. Suppose if the interest is 30,000 limit is applicable, then 30,000 multiplied with that many owners. That's the only thing. GAV computation, municipal taxes, NAV, 30%, everything is same. Interest limit alone will be like this. Suppose if it is LOP or DLOP, limit also need not worry. Compute as if it is owned by one person. First compute income from house property divided by how many owners were there, split the income. Over. Listen to this once again, you will get clarity. That's it. Deemed ownership concept not that relevant. I will cover some of these points in clubbing provisions. Okay, I will cover some of these points in clubbing. Actually, you know, you can find my marathon once I'm showing you. Wait a minute. Just a minute, I'm showing you. You see here, there is a marathon of mine which I uploaded 4 months ago. In this, I have covered already, many already covered. That one I'm once again covering, but from my new material. That's it. Capital gains is covered here. Here, capital gains I have explained almost for 2.5 hours elaborately. Wonderfully explained. 2 hours 40 minutes approximately. If at all you have time, you can watch that. You will get a clarity like where a level altogether. Getting it? And amendments were also given here. Salaries provision is there, amendments. But anyhow, tomorrow morning, 14th January morning, 9 o'clock, I will start PGBP revision. Some 10:30 it will be there. Then again half an hour break I will take. Again I will start salaries revision. Some 1.5 hour it will take. By 12:30 or 1 we will close PGBP and salaries. That's it. Okay. So right now I'm winding up the session. I hope every one of you have thoroughly been enjoyed, have got clarity. Like even if you study on your own, to best of my knowledge, you would have not got this much clarity. I hope so. That's it. Okay. All the very best. I'm winding up the session. Bye bye. We'll meet tomorrow at 9 o'clock. And somebody's asking, just let me see the doubts, whatever is having. Sir, is that practicing ICAI textbook question in JAN MTP is enough for exam? It's not. I don't say it's enough or not enough. It is compulsory because it is having very good questions. Mageshwaran is asking a question, sir, if a person leaves India for business or uncertain period, whether second basic condition will apply? If a person is leaving India for business, that is also called as employment. Employment means what, you know? Employment means not working as an employee only. Employment means for engaging in some work. That's what the meaning. There is a case law on that which will be discussed in CA final. Okay, that's it, Magesh. I think you got the clarity. That's it. Okay, bye. I'm winding up. If you have any other queries, put it as a comment. If possible, I will try my level best to reply. That's it.